Hi everyone. In today's video, I'm going to talk about how you can save about 7 years off your mortgage without paying a dime extra. Coming up. Okay, so I'm going to talk about how you can save about 7 years off your mortgage. So I was talking to my friend this past week, my friend Anita, and she was asking me, hey, how can I cut my mortgage down so I can pay less years and I can retire, etc., etc. All right, so I'm going to talk about bi-monthly payments and why it's such a good idea. Let's say you buy a $300,000 house, okay? And your payment is about $1,500 a month. And you usually pay your payment on the 1st or the 5th or the 10th or whenever it is you pay it. All right, well, instead of making one payment, cut the payment in half. Make two payments. Make one for $750 on the 1st and one on the last day it's due, maybe on the 10th or the 12th or whenever your bank requires you to pay. And by splitting it into two payments, why is that such a big deal? Why does it make a big difference? I learned about this when I worked for a school system. They pay us every 4 weeks. So you would think you get 12 paychecks, but you don't. You actually get 13 paychecks because there are not 12 4-week months in a year. You have some months that are 30 days, some that are 31 days, etc. So that means at the end of the year, you actually have 13 months. So we had 13 pay periods. They were every 4 weeks. So if you pay every 2 weeks on your mortgage, at the end of the year, you're going to have one extra payment. That's one way it decreases your mortgage. The other way is that when your mortgage is calculated, it's basically pre-calculated to be paid over a 30-year period, or a 20-year, or a 10-year, or whatever your term is. So your bank is assuming that you're going to pay the exact amount every month that is due for those 30 years. Okay, so my friend said, well, yeah, but I use that to reduce my taxes and paying interest. Okay, that's great. You do want to reduce your taxes, but you don't want to be paying debts to reduce your taxes, right? You'd rather have that extra money to spend on yourself. On a $300,000 30-year loan, if you pay every 2 weeks, you're going to save over $100,000, and you're going to save between 5 to 7 years off your mortgage. So if you can finish paying off your house in 7 years earlier and have an extra 100 grand, you can do a lot with that. The reason why is when you make those extra payments, when you make one or two, the algorithm, the computer the bank uses to calculate your payments, has to recalculate, okay? So, and when you're making that extra payment, it's kind of like this. Let's say you paid an extra $50 towards your mortgage, right? It's not such a big deal. You're like, okay, $50, I owe 300,000. That's like a drop in the ocean. It's nothing, right? But over time, 30 years, it's like this. This is how much you're saving. So let's say you just got your loan and you're like, okay, I'm going to pay an extra, make a bi-monthly payment, or I'm going to just pay an extra $50. Either way, you're going to make this much of a payment, but you're going to save 30 years worth of payments on that $50 or that $100. So it might be a 5% loan or 4% or whatever your interest is, and you're saying, oh, I only paid, $50. 5% of $50 is only $250. It's not $250. It's $250 that year, but you're talking $250, and then it's compounded over 30 years. So it's a lot of money. You're probably talking about several $100s you're saving. So that keeps happening every year. Instead of doing this, you're doing this, and you're actually shortening the length of the loan. So making bi-monthly payments can save you a lot of money off your mortgage and shorten the amount of time you're going to be paying that mortgage. Now, don't sign up for these bi-monthly payment companies. You're going to get these mailers in the company. They're going to say, hey, extra $4 a month, we'll draft the payments for you. You don't need to do that. Don't waste your money on that. If your bank doesn't already offer it, like Wells Fargo and some other banks offer it, you can talk to them and they'll let you fill out the paperwork and they'll draft your payment every 2 weeks. If they don't do that for you, then all you have to do is set it up through your bank. When you have that quick pay where you can pay your friends with your cell phone and stuff, You can set it up so it pays your mortgage for you, but in 2 payments. Every 2 weeks, just make payments. Just schedule them so that your payments aren't late. So I try to leave myself a window because remember, the months vary. So I'll usually make them like on the 1st and maybe like on the 7th and then whatever, every 14th. You just space them out and just keep track of it. But that'll save you a lot of money. It'll save you about 5 to 7 years off your mortgage. And you won't have to do anything else. Thank you for watching. If you have any questions, please comment below. I'm happy to answer your questions.